Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP. And I do want to start off with this article here, going all the way back to 2018. This is literally 5 years ago. And the interesting thing about this article is that nothing has changed around this. This is liquidity explained. And there's just one subject in here that I do want to address, and it's this part here. So, if a financial transaction is an engine with moving parts and multiple factors that impact its performance, then liquidity is the oil that makes it move. Good, clean oil in the form of cheap and readily available liquidity means less risk and a faster, smoother transaction. Now, I want you guys to understand that there is a lot of money that could be freed up utilizing on demand liquidity. You've probably heard about Nostra Vostra accounts. There's about roughly, the last time that we looked, it was like $27 trillion in those accounts. That would be a vast amount of money being freed up immediately, and it would be a massive amount of liquidity also being injected into the system to help alleviate a lot of the issues that we do see today. It could essentially solve a liquidity crisis. But also, I do believe that Ripple is ahead of the game here. I think that they have been focused on this issue for so long. I think that their product suite, especially with like XRP powered on-demand liquidity, big opportunity. But crypto liquidity itself, I do believe that Ripple sees the vast amount of potential as well as power behind crypto and digital assets. This year, crypto liquidity bridge digital assets seamlessly, bridge traditional fiat systems with the new world of crypto. And we do see as more enterprises adopt crypto, it's critical that they can seamlessly bridge the new world of digital assets with the traditional world of fiat. With Liquidity Hub and Ripple's suite of products, businesses can access optimized crypto liquidity and an extensive payout rail network to power crypto payments, crypto treasury operations, and a variety of other solutions. And yeah, I think that this is an incredible opportunity. I think that this is a very interesting opportunity as well. And this is outside of the realm of XRP. Like, not even tying XRP to this. I do think that Ripple is doing a very, very incredible job spearheading crypto innovation as well as crypto adoption. We do see benefits of a liquidity hub. Well, one, optimize crypto liquidity itself, but then also we do see extensive global payouts connect to a global network of last mile payout rails. Then down here, streamline digital asset management, expand access to capital as well. Remove the need to hold pre-funded capital positions with multiple liquidity venues. This is huge. So again, not a lot of people care about this because, as XRP holders, we don't really care about all of the other offerings that Ripple has besides, cross-border payments, for example, because cross-border payments has always been a big focus. But I do think that this is a huge area of opportunity as well. I think that solving a liquidity crisis, which in my opinion is brewing 100% right now, is a huge opportunity. And I do think that Ripple is trying to solve this, and we actually do see down here how this will work. You have market makers, exchanges, OTC desk as well, Ripple Liquidity Hub at the center point, and then you have access to all of the main cryptocurrencies out there. And I do believe that XRP will be in there as well, but right now we don't really see it focused on within the Liquidity Hub. But this is a big area of opportunity. Mainly, we do focus on liquidity itself as well as liquidity opportunities because right now in the world of finance, guess what? All hell is breaking loose. If we actually go over here to the Kobayashi letter, we do see the summary of the Fed decision. So this was on the 22nd. Yes, I did not update you guys on it in a while. I do apologize. It's just the fact that I want to get a lot of things together and I wanted to go in depth on this before having a full-on breakdown of what happened. So first off, we do see that the Fed raised interest rates by 25 BPS, which this was evident. This was clear as well. We talked about it in the Discord. I did expect 25 BPS and then a pause. Now, we could see two 25 BPS, so this one as well as another one, and then a pause. But either way, I do believe that the Fed needs to pause this year. If they don't, then hey, we will see a massive collapse of the banking sector again. And we do see U.S. banks are sound events to weigh on growth. And we do see additional rate increases may be appropriate. Highly attentive to inflation risk. The Fed is not giving up on this fight against inflation. What do you see? The Fed is making it clear that inflation is still their top priority. Despite the collapse of regional banks, the Fed believes that the issue is contained. Powell will be speaking on this in 25 minutes. And yeah, we did see a few updates on this, but we've also seen a lot of people questioning his decisions because, again, him raising the rates by 25 BPS, for an example, just 25 alone, is going to constrict the markets a little bit more and more and more, causing a major problem to brew, which is a liquidity crisis. And we do see over here as well, the Fed is in a checkmate position. Choice one, raise rates and stop inflation, which basically we're seeing, but widen the yield pickup of money market funds over deposits. More carry trades come undone. The U.S. banking system is a carry trade, the largest. All banks borrow short and lend long and are in duration mismatch by design. An inverted curve punishes carry trades. Choice two, lower rates and reflate the bank's balance sheet, but inflation stays well above target rate. Consumers are steadily shifting from low-yield bank savings to high-rate SIPC-insured brokerage. Inflation creates the incentive to move. Recent headlines create the awareness and urgency to move as well. Anybody have a dashboard to track these flows? And he was talking about the Fred site. But ultimately speaking, yeah, I do think that we are at this point in time where, yeah, the Fed is in a checkmate position. I actually even said this yesterday, or I should say on the 22nd, before we seen the Fed decision. I said retail is being told lies right now, that their bank accounts are safe, depositors will be covered, and all is sunny in the world of finance. The truth is that the Fed is at a very scary point in time where either the decision to pause or raise rates will ultimately lead to systemic chaos, which we're basically seeing right now anyways. But I said we will now face the repercussions of the Fed's 25 BPS hike. Banking liquidity is being constricted. The crisis is far from over, and a much larger storm is brewing. And yes, I do believe that a much larger storm is brewing. I think that recently, with all of the events around banks, there were like a lot of red flags leading us to the idea that, hey, guess what? This is just the beginning. And if we actually go over here, so first off, Bank of England mentioned that there remain channels through which the UK economic conditions could be affected by stress in global banking system. Letter to Treasury Committee. Bank of England, further volatility and sharp moves in asset prices could risk crystallization of previously identified vulnerabilities in market-based finance. And they went public with this. This is crazy to me because, again, we are seeing that this is a global meltdown, essentially, of the banking sector. It is starting small. But then, guess what? When the pressure lid gets blown off, things are going to break loose. All hell. I mean, like, it's 2008 all over again, except, in my opinion, this is going to be on a much larger scale. And we also question on what's going to happen after. Because are we just going to repeat the same story over and over again? Because, in my opinion, something will change this time. And something will change, and we will probably get the new system, right? The new system will probably be initiated at that point in time. And I do think that this is all building up to that big event, that big bang. I might be wrong, though. Even if I am wrong, I still think that we need to address the problems right now. And the problems are still there from 2008. So we haven't learned our lesson since 2008. And this is a big deal. This is a big problem. What do you see over here as well? Capital One credit default swaps are now surging faster than during the global predicaments of early 2020. This banking crisis is far from over. And again, as we do look at credit defaults as well, like credit defaults are a big one. I actually see a big problem happening right now around the economy. Right? First off, we all know. So everyone that's watching this video, I'm sure that you guys see it when you go to the grocery store or when you get your electric bill in the mail. Like everything's getting inflated massively. Most individuals are living paycheck to paycheck. The economy is not strong. Although the Treasury wants to say that and the Fed wants to say that the economy is strong, all this kind of nonsense, we all know that it's not. It's all a big lie. But I still see individuals, within the 20 to 30-year-old time frame, age group, if you will, they are all still buying heavily, and they're buying things that they don't need. Just the other day, I seen a few people buying brand new cars. I see a lot of people buying houses still. We are seeing individuals leveraging themselves way beyond their means. And the biggest problem around this is that we will see credit defaults. We will see a big, big push towards credit defaults. I think that most people are leveraging credit right now anyways, because again, just to get by is extremely expensive right now. And I see it every single day. I mean, I'm going to be fully transparent with you guys. I recently moved because of my girlfriend's work, her job. We had to move, we had to relocate, and the apartment that we were renting was a two-bedroom, two-bath, and it was about roughly 1,300 square feet. The price tag on it per month was about $1,940 per month in rent. When they wanted me to redo my lease, I already told them that I was moving, but they sent me a thing anyways to renew my lease and get a discount. The discounted price per month on that apartment was $2,480. Now let me ask you this: would you rather want to rent for $2,480, or would you rather jump into the mortgage at a 7% interest rate? Because either way, you are getting slaughtered financially. But this is why most people cannot afford to live day-to-day lives. And we still see the Treasury and the Fed saying everything is all fine. Everything is all sunny in paradise. But it's not. You see over here as well, 20% is a truly massive bank run. Shocking, they are still here. Here we have PacWest secures $1.4 billion of cash from Atlas after deposits fall 20%. Lender is among handful of West Coast lenders under pressure after collapse of Silicon Valley Bank. Guys, I want you guys to realize what is happening right now. This is a much larger scale. 2008 will look like a blip on the chart compared to what we are going to see, because all of these banks are massively over leveraged with your money. Not only that, but credit is massively over leveraged. Everyone is still living paycheck to paycheck, but we still see individuals overspending and living way beyond their means. And we are going to see a massive wipeout. We do see over here as well, remember, we are also at a maxed out debt ceiling of $31.4 trillion. Most people overlook this, but somehow they can also insure all bank deposits without needing Congress to pass anything. We have Treasury officials exploring ways to temporarily insure all bank deposits. Report. It's absolutely insane that we're seeing this. We did see over here as well, Fed Chair Jerome Powell and Janet Yellen say U.S. banks' capital and liquidity are strong. I reported on this the other day. Like there's no way. No way. I mean, yeah, technically you might be able to say, yeah, everything's still strong because we'll massively print, which that's what they are mainly going to look at. Is, hey, we got away with it so far. Let's just raise the debt ceiling even more and let's print a whole bunch of, endless fiat. This is why those that are holding fiat right now are getting murdered financially. I'm telling you guys right now, you need to step back and assess the damage that the Fed has caused in the last couple years. Go to the store. Every time that I walk into the grocery store, it's $100. Electric bills skyrocketing. Gas skyrocketing. I mean, everything around you that you need, necessities, are skyrocketing in value. But guess what? You can still go buy you can still go buy a TV, and TV prices are drastically down. Because hey, they want to keep you distracted. Keep watching that television. Listen to what they want to force feed you through the mainstream media. Everything else is so expensive. And something needs to give. Something is going to break. What do you see over here? Janet Yellen says situations like run on Silicon Valley Bank may more readily happen in the future. Regulations may need rethinking. Things are an absolute mess. And remember, Yellen in 2017, no financial crisis in our lifetime. And they will continue to point the finger to try to blame someone or something. And I do think that crypto is going to be the fall guy. I think that they're going to continuously tout that crypto caused this, that there was some sort of crypto exposure, and that's what caused it. All nonsense. We all know what caused it. It's endless printing of fiat, killing the entire system, inflating the system with dollars that nobody even wants to utilize. This is ridiculous. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe to notifications on because I'm more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, hope that you all have a beautiful day or a beautiful night wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.